Time now for our Wall Street Week Daily segment. David Westin, the host of Wall Street Week, joining us today, just a little bit about an hour away from your normal show here. And you had a chance to sit down with Blair Effron. Of course, everyone in our world knows who he is. Yeah. And you had a chance to talk to him about the M&A pipeline.
Yeah, he's at the center of so many deals, including the Emerson deal that he just did, a really big one. And the question is, how come it slowed down so much, and when is it likely to come back? And we started out actually asking about credit, because we always talk, Romaine, about the tightening of credit. Is that part of the reason? So this is what Blair had to say about why we're seeing a slowdown in M&A.
It's getting better. It's still constrained. Fourth quarter of 22, you had nothing. Today, you actually have the markets loosening up for the right deals. I think an interesting data point, for example, the largest LBO in the past 6, 7, 8 months was a deal with Blackstone and Emerson for their climate business. $14 billion deal. No bank debt was available. The private direct lending market stepped in. Firms like Apollo, Blackstone, KKR, Ares. They did $5.5 billion of financing to see it through. Half of that has been replaced in the past week by the banks. So it really depends on the credit, and it depends on what the deal is, but there is absolutely credit available. Obviously, the key is it's much more expensive. You should assume for a private equity transaction, it's 500 basis points or so higher than it would have been a year and a half ago. And for a corporate deal, 200, 250 basis points. And that leads to the next issue, which is how you price an asset for sale. And obviously, with multiples staying high and elevated, and at 18 times PE, it's the same as it was last year, same as it was in 21, but yet your returns in any transaction are more difficult. So you have to think about how to get the buyer and the seller to come to agreement. Not easy.
As I recall, Centerview might have had something to do with the Emerson deal. Is that correct?
We did. You can give us a plug, I won't.
Okay, I'll do that. So let's go to that question of buyers and sellers and where they think the price is. Because some of those prices are coming down. Valuations are affected by interest rates and also some slowing of the economy in some places. Have the sellers gotten their heads around the fact that their price may be lower? They're
finally starting to do that, which is actually why I think there's more discussion. You don't see it yet in terms of announcements, but you see companies thinking more about M&A as part of their thinking in 23. And I would venture to say that as we exit the year, 23, and get into 24, you'll see activity actually start to pick up quite a bit. So you think it will come back? Do you think we'll reach the levels we had before? Because we had some record levels there. Oh, boy, that was high. You think about a $5 trillion peak market, that probably unlikely, but the idea that you'll have a stable global M&A market of $4 trillion or so a year, I think absolutely. And what you find out generally about M&A, David, now is it's less prone to cyclicality. It's part of a company's core strategy. Most companies are actually very good at it. And when you're thinking about new avenues of growth, new areas for your business, you're thinking about the pace of disruption and how you combat that, it becomes important for most companies to want to consider.
When you've been on with us before, you've emphasized, Blair, that uncertainty is one of the biggest factors in determining whether companies want to do deals or not. Where are we with uncertainty? Because there seems to be a lot of uncertainty around right now.
We are in uncharted, complicated waters, starting with, obviously, the debt ceiling, which we're going to come back to, the banking environment more generally, and whether you think we're in a slowdown or something more severe in the coming months. I happen to be in a slowdown camp. I think there's a lot of resiliency that we don't account for, a lot of tailwind that will lead to stability. But that uncertainty clearly is an issue when you think about doing a transaction. And remember, you want to be able to think about a transaction when there's a macro tailwind, because it covers up some of your assumptions that may not pan out. It's just people do better in a growth environment. Any company does. So clearly an issue, and I think until the debt ceiling situation resolves, and that's with a question mark, a hope, it'll be weighing pretty heavily.
We heard from Jamie Dimon of JP Morgan again this week, and he reiterated something he had said before, which is we can talk about the 10-year yield, we can talk about regional banks, we can talk even about the debt ceiling. The thing that worries him is geopolitics. It's actually Russia, Ukraine. It is China, U.S. relations. It's Iran. Does that affect your business?
Of course it does. Now, I would tell you that I don't know a CEO who is not exquisitely attuned to the geopolitical environment everywhere. They are experienced in operating globally in all kinds of different areas, and it absolutely goes into what kind of advice and what kind of discussion you're going to have with the CEO, what kind of discussion you're going to have with the board. Where should you put capital over a 5 and 10 year period, not just over the next year? What are the black swan risk, or frankly, what I call a gray rhino, something that's staring you in the face, but you just don't pay attention to it, and then it actually hits you. All of this makes being a senior leader in a company more difficult, more uncertain than ever. And I applaud a lot of them for actually steering the ship through this kind of complication. But I will also tell you that companies are better than ever managing through uncertainty. We've had a decade and a half of uncertainty, yet companies across the country, big and small, performing better than ever. Just last quarter, 80% of our companies surpassed estimates. Granted, the estimates were revised, but surpassed estimates. And companies are more nimble in how they make decisions, more nimble in terms of how they take data information and figure out what the potential outcomes could be, and factoring that in. So more difficult as a macro, but we have an industry and a private sector that's up to the challenge.